Hi, my name is Darren from HCJ.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor and privilege of speaking with George. George, can you please introduce yourself?
Thank you, Darren. My name is George Dimov. I'm a certified public accountant, and I have a team of 14 senior professionals. And what we do is the same type of thing: demystify taxes as much as possible, and with a focus in international and typically complex situations.
Fantastic.
So, following on from the last question, let's talk about the opposite: immigration, pre-immigration tax planning, as in people coming into the U.S. From at least from my point of view, I know it's anecdotal, it's not scientific. The demand is stronger, as strong as it is as it has ever been. Yes, the U.S. is not perfect, but no place is. But given the other options, in terms of the strength of the economy, in terms of the rule of law, etc., the U.S. is super attractive, especially for high net worth individuals. So, in terms of that pre-immigration or inbound tax planning, well, what are your thoughts? What are your experiences? What are your comments on that?
Yeah, I love that. And I love how you phrase the question. I do believe the United States is, in many ways, one of the best places in the world. Okay. And like you said, there's no place that's perfect, but it's one of the best places in the world, in my opinion, and in my experience too, to build a career, to build a business, okay, and to achieve different business or economic goals, and maybe even personal ones. So I definitely believe that that's the case, and many people have seen it. And the immigration here to the U.S. and the push for people to come here speaks for itself. And you're absolutely right about that. Although there's been a flood of people interested in exit tax, there are a lot more that are interested in coming to the United States, and I've seen them do it in creative ways. In places where the H-1B visa got limited back in 2016 in the Trump administration, then it never got restored during the Biden years. During that time, an interesting thing happened. Many people started to first immigrate to Canada and then come into the United States on a TN visa because it was so much easier to do so. So, I mean, I've seen so many trends on this, but I'd say some tips. I'll just give a regular family. The example that I gave before was the spouse and husband that are coming in from India, where the wife has gotten a job in a technology company. Okay, and I see that this example. I'm giving it to you because I see this all the time. Okay, they're coming from India, working at a technology company, and they have a young family. And some of the considerations to have are, first of all, is the family coming with you? Do you have your visas worked out? Usually through the employer, they have that process. By the time they approach us as a tax professional, they have that process settled and figured out. But some of the things from a tax perspective that you want to make sure is there are some very difficult reporting requirements on the United States side. If you are a non-US person that is moving to the United States on a work visa or any type of visa where you're coming to the US to make money and to live here, okay, including any of the E-Series visas for investors or things of that nature, okay, keep in mind, if you have foreign mutual funds or ETFs, they can be considered something called a PFIC, okay, passive foreign investment company. The reporting for that, and I know you have a show on this, Darren, the reporting for that is an absolute pain. Okay, there's mark-to-market reporting. You have to review the prospectus every year. You have to take a look at the underlying assets and take a look at the changes in their valuation. It's very painful, and your accountant will charge you a lot of money for it. And your employer, okay, because employers often hire one of the big four, Deloitte, Ernst & Young, KPMG, PwC, to do the taxes for these employees that are coming over. But there are items that they won't do. And the reason I know this is because I get hired all the time in situations where the client says, Deloitte is doing my returns. I came in here through my my tech employer. I work in engineering, but they're not going to do this and this and this. And oftentimes it's your 5471s. And that's, as you know, that's your reporting of a beneficiary ownership of a foreign business, okay, over 10% or controlling interest in foreign business. So if you have a foreign business, okay, this is a time to think about, if you have shares in it or if there's any kind of way to kind of get rid of it while you're still considered a non-resident for tax purposes, okay, then this is a good opportunity. You're about to leave to the United States, get rid of your PFICs, get rid of any 5471 filing requirements, any 8865s for foreign partnerships. Remember, there's different types of insurance that may have reporting requirements. So I'm not saying get rid of all your assets and create maybe a firestorm for yourself. If these assets are really important for you, make sure that you have a plan and make sure that you speak with an advisor prior to the move to know what your plan is and to weigh the balance. What are things that really matter to me and what are things where the benefit, the cost exceeds the benefit? And usually PFICs are your one thing where, somebody will own a couple shares in some mutual fund and the compliance cost, okay, to have a licensed professional do it can be $700-800, okay, in some cases, depending on how complex it is, and they made $100 worth of gains on it. I see this all the time where they say, why does it cost too much? And it's we know it, and Darren, you know it. The cost of non-compliance can be tens of thousands of dollars in penalties. So clients and foreigners that are coming to the United States are being put in this tough position where the cost of compliance exceeds the benefit of owning some of these assets. So the top level rule of thumb is before you move to the United States, make sure ahead of time. Don't wait until it's tax filing period. And that's something that doesn't only apply to international. It doesn't only apply if you're in crypto. It doesn't matter what complexity you have. Well, if you have a complexity, speak with a tax advisor far ahead of time. Okay. And during the peak season, don't expect that you're going to have hours and hours of planning time. Many tax advisors between the January and April season are focused on getting the returns in or getting your extensions filed. The time to plan is far, far in advance. So my word of advice is schedule a session, go over whether you should sell PFICs, go over if you should restructure holdings, go over if you should redistribute any trust income or any trusts or dissolve any trusts. Okay, because all of these or same thing with bank accounts. Make a decision what you're going to do with these bank accounts for your 8938 filing purposes or your FBAR purposes. For those who don't know, those are forms required to report your foreign assets. Make a decision ahead of time because that first year, if you're under 183 days, maybe you might not have a full year filing requirement where you have to report these. Maybe you can just get away with filing a 1040 non-resident return and our return. But that next year, for sure, you're going to have this issue. So do it far, far, far ahead of time.
Yeah, absolutely. Well said. You explained it perfectly. Thank you for that. I'm sure anyone viewing this will really appreciate it. George, if someone wants to get in touch with you, what's the best way to do that?
My website is a great way. You can go on our website, which is Dimov Tax. It's my last name. That's EIMOV tax.com. Or you can send an email directly at info@dimovtax.com. Those are two great ways to get in touch with us. We also have a phone number. You can also call us. And the best phone number is 833-829-1120. That's +1 833-829-1120.
Fantastic. Thank you.